Today we'll go over the trades that I took past week. I will show you my results for the month of February and basically break some trades down that I really like this week. So if you're ready to learn something, take your notepad, take your pen and pay close attention because right here you will learn something. So guys, as you can see, I will directly put it right in front of you, my stats for the month of February. As you can see on the top left, we have like 13k right here. Don't pay a lot of attention to the numbers that are displayed on the screen. Do pay attention to the risk to reward tool. I'm trading multiple accounts, multiple funding accounts, and I'm trading them separately while I'm also trading challenge accounts. So that's basically the reason why I use 1000 for a loss, so -1 hour, and 2000 for a win if it is a 2-hour trade, 3000 for a win if it is a 3-hour trade. As you can see right off the bat, the first week of February I didn't have any trades. The second week I had, I would say, a really bad day for myself, and that's why I also took the rest of the week off. Yes, this was a massive trading day for me, but I massively overtraded. I don't think I have the screenshots attached in Edgewonk, but I do have them in my trading journal. No, I see. So I will take my trading journal with me. Normally you guys can see this perfectly. So as you can see, trading journal, these are the trades that I took this month. And as you can see, heavily overtraded. These two were taken on a challenge account, so I did not put them in my Edgewonk, but they are in my trading journal right here. So let's go over the first trade. The first trade was on my ftmo 200k account, was in the month of February 6th, and it was good for a 4.3k trade. So it was on EURUSD, my holding time was 15 minutes, and as you can see, it was based off a 1 minute time frame. So lately I've been really enjoying the 1 minute time frame. And basically I've been using the higher time frame. Also, as you can see right here, I've been using a 1 hour Favetic gap right here. People have been asking me what profile I would recommend nowadays. It would definitely be Blue Guardian. They have one of the best prices in the game. They offer an 85% profit split. They do bi-weekly payouts. But what I love the most is that they have this awesome feature, and it's called the Guardian Protector. It's an equity protector that will literally help you overcome your psychological struggles of overtrading and over risk. The support is available 24/7 and they have no restrictions at all on lot sizes, hedging, trade copiers, EAs, you name it. I've done my research and I've yet to find someone that doesn't agree with me. So I would say check out Blue Guardian if you want a reliable prop firm, link in the description. I've been using the higher time frame for my analysis and for my point of interest, exactly the same as I always used to do it. But now lately I like to be a little bit more early in the game and a little bit more early in the trades. One, gets my trade frequency up. It is something that I've not been really content with in the last few months, I would say. If I would take my A+ setups, it would only occur like once a week, twice a week. And even though that is very good and very healthy, I found that very difficult for myself. And I'm not saying that if you have 1 to 2 trades a week that you should try and fix this or up this frequency. Even I probably shouldn't be doing this, but I like to be in the charts and be in the trade a little bit quicker, so that I'm also a little bit quicker out of the trade, if that makes sense. Of course, the downfall of that, the trap of that is that you can overtrade very easily because of that. And that's also what happened right here. Luckily for me, I capitalized very good on this day. So even though I overtraded, I basically kept myself in check and I protected my risk very wisely. So as I noted down right here, an error that I made was FOMO. I entered a little bit too quickly and was basically calculating my lot size, and EU shot in the direction of my bias. So this was the first day coming back to the 1 minute, and I found that FOMO got the best of me right away. And that is something that you will see on the 1 minute. But on the 1 minute, you need to act so damn quickly. So as you can see, we had a market structure shift right here. And this is basically, okay, I need to act right here. And that is what I did. I acted right here. My original plan was to enter on these lows down here. That's why I said, okay, FOMO. And then I risked 1.1% instead of 2%, and in the end it did play out well. So yeah, the account was in profit, so my risk management plan is okay, risk a little bit more. Otherwise it would have been a 9k trade and would be a very nice payout, of course. But now it was a 4.3k. I'm not complaining. It was still a very nice trade. I'm not going to the charts. I'm trying to really go over these trades as I do right now. If I have to go to the charts, I have to find them first, and it will be a mess. For the next video that I make like this, I will figure it out on the charts or make some more screenshots that is a little bit more clear for you guys. But for now, it is what it is. Then on GBP/USD, I basically took the exact same position a little bit later. It was an hour later, and it was basically a continuation of the trade that happened before on EU. Again, a 4.1k trade. Very good. On this one, again, 1% was risk, but this one was intentional 1%. As I've already taken a trade before, I'm not trying to give away all of my profits. So I risked 1% for 1/2 very, very quickly. Right here, as you can see, I marked up my charts and basically price came tumbling down. Price took out this liquidity level and traded into this order block right here. Reacted very good of it. Then right here, it started making lower lows. Then right here, it made a lower high compared to this one, but it did still make a higher low compared to the original one that made that push upwards. So if you're looking at this, you really want to be paying attention to this one. If this one gets broken, there's a clear continuation of the downtrend, but it didn't in this case. So now, okay, I was like, if this low is going to be a strong low, this high needs to be broken, and then most probably we'll see a reaction up higher somewhere up here if liquidity gets taken out. But right now, we were still respecting these lows. We are respecting this high. So the only obstacle that is in my way could be this fair value gap. So I took the chance. I entered a position right here. I gave my stop loss quite some room, 5 pips. And I targeted 10 pips, good for a 1/2 position. Basically the same trade that I took on EU. Then the next one, again on my FTMO account, was on Euro USD. So this was a little bit later where I scaled in, if I believe I'm correctly. No, so this one was closed. Then I opened another one exactly behind that. And this was a larger trade. I remember this. So this one was taken off the 15-minute, if I believe. And yeah, as you can see right here on the 15-minute. So basically, price reacted to that 1 hour fair value gap, gave it a strong reaction downwards, had that liquidity grab, all of that. And then what I did, I put a stop order right here. So if price would pierce through that order, I would get filled in and my stop loss would be above a 1 minute high right here. And this was also inside of that other stop loss. So as you can see, the other one got tapped out on take profit while this one was getting filled. So then on a 5 minute, it looks like this. Why my stop is right here and not above here? I would say it is a little bit of an error that I made. The better thing to do for me was to put it above here, 100%, even above this one. I was going in with the intention, okay, GU, EU, it is very, very volatile to the downside. I'm just taking that continuation trade and my stop loss is going to be at a place. It is at the top of this order block. If price gets here and it doesn't react immediately, I will most probably be stopped out anyway. So it was a little bit of a smaller stop loss already just to prevent my loss. And then I was targeting these lows, this fair value gap right here and this liquidity level down here. And as you can see, we pierced very nicely through that, good for us 6.2k profit. Then the next one, and this is where it started going sideways. So what happened? I was done trading basically, and as you can see, it was like a 14k day. Incredible, right? Incredible day. I was on a little bit of drawdown, so in the end it was like 8 or 10k on my account balance and a profit. And I got back to the markets. I got back to, by the way, sorry for going so much off topic. I just wanted to show you last week's trade, but this is just like an extraordinary day to show you that I also still make mistakes, that I'm not a perfect trader and I have a lot to learn still. I think it is a very important day for me to go over because this is what people don't show you. So I went back to the markets and I went back to the charts and I saw, what was it? It was USD JPY. It was USD JPY lining up for a beautiful, beautiful move. And I was ready to take it. I was ready to take it long. Yeah, I was ready to take it long. No, I was ready to take it short if I see this right now. Because I know the setup, I remember the setup, but I forgot the execution. So I was ready to take it short. And in my head, okay, if USD is going short, Euro is going long. Right, to see the opposite correlation, but of course it's not always the case. If USD JPY is going short, not necessarily EU is going long, and I forgot it at that moment. So as you can see, Euro USD at 15.02, so middle of the New York session. Basically, we came down right here. It was the move that we took. Then we came up, and then we started to consolidate right here, getting ready to or go further downwards or to make that pullback. So then I got FOMO, got greedy, got tilt, and basically because we were swerving in this drawdown zone, and I was like, okay, I don't need to be in this, and I don't want to be in this. And I got out right here on the yellow zone because I was like, okay, we broke this 1 minute low. I was just afraid. I was just afraid that it's going to turn around and I was going to give back my profits. I also risked 1% on this one, or maybe, I risked more. I risked was probably 2% on this one. So I was just afraid that I was going to turn around and take out my position. Now, what happened afterwards? This one hold its stand and we hit take profit. It's a lesson learned. This is a trade that was going before that we just had. And as you can see right here, I was stopped out by the pip. Yeah, right, I stopped out by the pip. I re-entered once price created a maximum shift on EU and a DXY. So price came down right here. I had my stop loss underneath this low. Very, very nice continuation trade, stopped up by the pip, started consolidating right here. So this was this trade then right here, consolidating, and then afterwards I got out and then it got to take profit. Very fortunate situation. This one was good for a minus 3.7k, so minus 2% down the drain. But yeah, big errors made right here. And this goes to show that I still make psychological errors to this day. Then let's go over last week, because last week was a pretty good trading week. We had 5 trades again on the Monday and then 2 trades on the Tuesday. So 5 trades on the Monday. So it was a very good trading day for me. Why I have 5 trades for that? Because I have scale-ins. So right here, this one I took on the funded trader on my 100k account. I did not know my P&L, but my P&L was 4k. So that was the first trade that I took at 9 o'clock in the morning, right on London Open. So on the 15 minute, on the 1 hour, let's go on the 4 hour time frame. As you can see, is in a very big down move. We have a very big imbalance up here, 4 hour imbalance. And I was like, okay, EU always does this pattern, right? It goes down, it creates this false pullback, it goes down to take a liquidity, and then it creates a real pullback. So exactly what happened right here. It comes down, create a false pullback, comes down, take a liquidity, and create a real pullback. So I was just basically trading the continuation of this. As you can see right here, price had a sell side liquidity taken out and started its up move once again. Then on London Open, we had a massive impulsive move, and it's basically exactly where I entered on the 50% of that. It was a little bit of consolidation and then just shoot it upwards. And it was good for a 1/4. I was aiming for these double tops up here. Then the other trade that I took was an unnecessary scale, and that was the one that I lost. I've noted down that I lost one. And then I don't think I have journaled the other ones, sadly enough. Oh yeah, then I had 2 unnecessary scale-ins. These 2 that I closed early. This one was a scale-in that I probably have lost. I have no screenshots. I have to get better at this. And then I had another winning position that I didn't, for some reason, note down on my trading journal. Anyway, it really gets to me when I make simple mistakes like this, like forgetting to add screenshots. Or just simply not adding it into my journal on Notion. Then right here, on Tuesday, again on the Funded Trader 100k account, I had a 2.7k day. Very simple continuation trade. I have no high time frame analysis, that's very sadly, but London Open happened and took out previous highs from Frankfurt. Then we had massive move downwards and I just entered right there. It is also in the continuation of a higher time frame trend, and this is in a POI that I sold, because this is that 4 hour zone all the way up there that I told you about, that imbalance zone. We came into that, we had a very strong reaction downwards, and then I was just waiting to trade that continuation. Exactly what I did. Then the second trade was a loss. So very unfortunate day. I made 2.7 by risking 1%, and then I gave 2% back on another account, on the ftmo one. Oh no, 1%. 2k. So very unnecessary trade, I would say. I was trying to take the continuation down here, but I did not notice that price took a liquidity by making this move. So it was trade number 2 right here. And without a market structure shift, hoping on a continuation. Very crucial word right here, hoping. Then the last trade that I took was on Friday, also on the Funded Trader on another account. This was a challenge account, and I lost 2% on this one. It was the first trade that I took on the challenge account, so I risked 2%. Very, very stupid trades, if you ask me. Like we can see right here, we clearly take out liquidity, and of course then we are going for the other side of liquidity. I took a buying position, God knows why, but as you can see, once price takes out the other side liquidity, then it moves up. So yeah, good idea. Misread the market at that time. Most probably also been off with my sleep, if I remember correctly, that I came in too late to the markets. And this is something that you need to realize, guys. Sometimes or basically most of the times when you make trading error, it always has to do with what are you doing outside of the markets. Are you in check with the markets? Are you focused? Are you waking up at the same time, at a decent enough time to analyze your trades? Are you really doing what is needed for you to become a professional and a profitable trader? So this was me. Overall, February was a very good month. Let me see, I made 7.5, 1.5, that's 9, minus 1, that's 8. Minus, this is break even, 8, this is break even, and I made 13%, yeah, 13% right here. That was a new account that I started on Edgewalk, but I made 13% this month, and yeah, I'm very happy with it. Right now I'm waiting for the month to end, then in March let's start a new one and see what March is going to bring us. If you want to, by the way, sign up for Edgewalk, there's an affiliate link in the description. It will be highly appreciated if you, of course, use that one. The trading journal is free for download in the description, and yeah, I'm open about this, guys, because I have noticed that it's something that is very needed in the trading space, and it is something for me to hold myself accountable to you guys, because it is not easy for me to trade knowing that I have to show you guys everything. Of course I don't have to do anything, but I want to, and I just want to show you guys that also I struggle with psychology, Basically, all the trades that I lost this month were unnecessary trades. Knowing this, being aware of this, trying to improve this every single day is the only thing that's going to help you in your trading journey. So guys, I hope you enjoyed this video. Some of my trades broken down, my monthly stats, and I will see you in the next one. Bye bye guys.